What is a family opportunity mortgage? Hey everyone, thanks so much for joining me. My name is Jeff Trevarthen and I am Jeff the Mortgage Pro. I do really appreciate you watching all these videos. And today we're going to be talking about family opportunity mortgages. But if you could do me a huge favor, I am trying to grow my channel. And if you like the videos that you see on my channel or you like this video, if you do me a huge favor and press that subscribe button down below or click the like button and help me get these videos out to more people, I would really appreciate that. So let's dive right into our topic today of family opportunity mortgages. So what are they? They're conventional loans offered by Fannie Mae and Freddie Mac that give us guidelines in order for a parent who may not qualify for a loan to have their children help them buy the house. And conversely, there's also opportunities for a family opportunity mortgage if you are an adult and you are helping your disabled or handicapped child buy a home as well. So two different instances in where we can use this particular guideline. It's not actually called a family opportunity mortgage. It's just a guideline that's in the Fannie Mae and the Freddie Mac guidelines that allow us to help us buy these properties for these special people. Okay, so it's offered by both Fannie Mae and Freddie Mac. Oftentimes it has lower interest rates. That's the first benefit of this. And by lower first interest rates, I mean, if you were going to buy a property for your mother or your father or your son or your daughter, and you were to help them out, but you were not going to live on that property, it's called a non-occupant co-borrower. But with this special provision of the family opportunity mortgage, it allows us to buy this as if it was your primary residence also. So even though you may already own a home and you're helping your child or your parent helping them buy the house, you can still qualify as if this is a primary mortgage. So this is going to have the most beneficial interest rates going forward when you're buying a primary residence. And this provision allows us to help us do that for our family, okay, which I think is a pretty cool benefit of this. They're actually easier to qualify for, and for the same reason, as I just mentioned here, if you were buying a property that is a property that you are not going to live in, so either you're a non-occupant co-borrower on a property or you're buying it as an investment property, there's a little bit stricter guidelines with those types of things. But since the family opportunity mortgage allows us to qualify as if this is going to be your primary residence, then we have the loosest guidelines, I guess, we can actually have in underwriting because we're buying it as a primary home. That's what the flexibility is with this particular program. You have, again, reduced down payment requirements. And again, because we are buying this as if it is our primary residence, we can do as little as 5% down on this particular type of a mortgage provision, which I think is really cool. So if your parent or your child that you're buying the house for doesn't have a lot of money for the down payment and you have some money for the down payment, you can help them out. As little as 5% down is what you need to qualify for this loan. There's no mortgage insurance in certain situations with a family opportunity mortgage. And those certain situations would be if you put 20% down or more. So oftentimes parents have the cash, but they may not have the income to qualify for a mortgage, and vice versa if you're doing it for your child. But this particular instance, you may not need to have mortgage insurance, just like any loan, if you were going to buy a property with 20% down or more. And then lastly, I think that the family opportunity mortgage has more flexible underwriting guidelines. And I say that again because instead of qualifying as a non-occupant co-borrower as an investment property, you're actually buying this property for a family member. And again, as an owner-occupied residence, so you're going to have the least amount of restrictions when you're buying a property as your primary residence, even though you're not going to actually live in this property, but you're using this family opportunity mortgage provision. So have you heard of this before? Have you ever seen the family opportunity mortgage? If so, please mention it in the comments down below. I'm surprised that not a lot of people know about this from what my research has shown me. But I want to get this out there, and hopefully if you are in that situation where you're helping your parent buy a property, or if you're helping your child buy a property, and you can use this provision, it's a great little provision to be able to use. So you can buy it as a primary residence, even though you may already own a property. Make a comment below. I'd love to hear from you. And if you need any help setting up this particular family opportunity mortgage, please make sure to reach out to me. I'll put my Calendly link down below, and you can schedule a call with me am trying to get licensed in as many states as I can this year, and we're moving along and getting those ready to go. So thanks so much for watching, and I look forward to chatting with you again on the next video. Have a good day. Bye.